and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled, How to Take Control of Your Retirement Portfolio. Now, before I start, I want you to keep this thought in mind, that a goal without a plan is just a wish. So how about this as a goal to set for yourself? By taking control of your retirement, you can build wealth, transform your legacy, and live financially free. Now, my goal in this presentation is to show you that you can achieve your goals when the proper plan is in place. Now, I know you probably get flooded with emails promising to help your retirement, and you're probably skeptical and thinking, well, go ahead and prove it. Well, we've been doing this a long time. In fact, VectorVest started way back in 1988, and for decades, using the power of the VectorVest program of stock analysis and market timing, we've been able to build investment plans like these. So here are a couple of investment portfolios we have built and now manage with our retirement coaching group members every Tuesday. In this growth portfolio, the goal here is capital appreciation, buying good quality stocks that are rising in price in a rising market. And this particular investment plan for capital appreciation has tripled in just under 5 years. And here I have a dividend growth portfolio. Now, this equity curve shows just the capital appreciation of the stocks. It is a little bit longer term, as the dividend portfolio outlook is longer term for steady income flow. This equity curve shows, again, just the capital appreciation. Add another $50,000 roughly in dividends to this number, and you can see how with proper planning comes superior results. Now, the title of this presentation is How to Take Control of Your Retirement Portfolio. So we have to begin by asking this question. Are you in control of your retirement portfolio? Now, I can tell you, you're not in control if you're worried about the next market collapse wiping away a good chunk of your nest egg, and it's causing you to be so conservative that you're not getting the gains you see others getting. You're not in control if you want to grow your account steadily each year, but it seems like every time you buy something, the market or the stocks you pick just drop and your portfolio goes nowhere and just spins its wheels. You're not in control if you don't have an income source that is as steady or as big as you need it to be, and it's causing you to scale back your lifestyle and not do the things you want to do. And finally, you're not in control if you happen to be one of the many people approaching 65 or over 65 who still have to work, not because you want to, but because you have to. Does any of that ring true to you? Now, after decades of working with retirees here at VectorVest, we have determined that those scenarios are simply the symptoms of the core problem. And that problem is that your retirement investing model is broken. And all it takes is a few minor tweaks and you can get that fixed. And then once fixed, your retirement can be on solid footing. And that's what we're here to do today. The model we use, and which has been proven to work, is what we call VectorVest's 3 Ps investing model. Now, the 3 Ps are profit, provide, and preserve. When you think of profit, you can always think of the word growth or capital appreciation, as I just showed in the previous investment plan. Profit is a plan to grow your portfolio safely and steadily each year. When you think of provide, think of it as providing income. It's a system that will generate consistent, steady cash flow. And then finally, when you think of preserve, also think of the word protect or insure. Preserve is a protection plan for capital preservation. So when put together, it leads us to our goals. So if you want to achieve the goals of building wealth, transforming your legacy, and living financially free, then you need to grow your investments, generate income, and protect your capital. When you do all three, that's when you'll achieve financial freedom. So the first shift you need to make is to shift from not being in control of your own retirement to where you decide to take control. Now, the first P that I'm going to begin with here falls under the preserve category of protect your assets. I'm using preserve first because it's important to understand the concept that you cannot grow your capital if you don't know how to preserve it. So instead of worrying about the next market collapse wiping away your nest egg, you need a strategic defense system to protect your assets. Now, a lot of people get caught by surprise when the market drops. Usually after it happens, you hear the people on TV and advisors talk about what you should do now to try to get your money back. Well, instead, you need to know when the market is toppy and what to do to insure yourself against the market collapse. So how can we prepare for the next market collapse? Well, it comes from proper market guidance. Here's a look at the market since 1999. This is the VectorVest composite on our market timing graph. Now, I know you've probably owned good quality stocks and watched them drop when the market drops. We've all been there. Let's zoom in on a few of the biggest market moves that crushed a lot of people over the last 20 years. Now, I'm guessing there are people listening today who held stocks or managed funds through the bursting of the dot-com bubble. Right? During the dot-com boom, a lot of investors were able to grow their portfolios many times over. However, in 2000, most lost almost everything over those next 2 years when the bubble burst. That happens way too much. You make money during the uptrend, and if you don't know how to protect it, you give it all back when the market collapses. Now here in 2008, when the housing bubble burst, right, the average mutual fund dropped over 40%, and many people lost 40-50% of their retirement nest egg. And just last year, the S&P 500 dropped 34%. How many of you had your financial advisor call you leading up to any of these events to warn you? I doubt there were many phone calls over that period telling you to get out of the market. Which brings us to today. Many are worried about the next market collapse. Some people say you can't time the market. Well, the fact is you can't predict the market. What you can do is analyze the trends and what's going on in the market and recognize those trends. And by recognizing that trend, we can be proactive and employ a strategic defense of our capital when the need arises. Now, you want to make sure you have a system that allows you to determine that market direction. And some people use things like moving averages on the S&P. Well, I use the guidance from VectorVest. Whatever you do, I suggest you don't listen to the talking heads on TV. Instead, you should have a system which is not emotional, which is based on empirical data, and has an historical track record. So let's take a look at a few of the major market moves that we talked about earlier. Okay. And again, we'll go back to looking at the burst of the dot-com bubble. Now, every Monday through Thursday in our daily color guard report and in detail on Friday night in our timing the market session, we provide guidance such as this. Back on March 17th of 2000, about a week off the peak, we said that in our strategy section, I believe that the rally is exhausted and downside risk outweighs upside potential. Prudent investors should protect profits and take defensive actions such as buying puts. Consider any rallies as an opportunity to sell stocks at higher prices. That is tremendous guidance as we look at what happened shortly after that. Were you investing back then? Would that have been beneficial to you at a time like that? Let's fast forward to the next big market collapse when the housing bubble burst. Now on November 2nd, 2007, just days off the market top, Dr. DeLito wrote in his essay, A Word to New Subscribers, the confirmed down signal that we received yesterday could be the entree to a long bear market. He went on to say, don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. Would that guidance have helped you protect yourself? And then let's move to the most recent drop, which happened just last year. Back on February 14th, just days before the peak in the market, we noticed warning signals in our market indicators. And we said the price of the VectorVest composite continued to move higher this week, closing at a new record closing high. However, as the price hit a new high today, the BSR closed lower. And to add to that, if we look at a 3-month market timing graph, we see that while the BSR, RT, and MTI closed higher week over week, they are at lower levels today than they were during the January high. This bearish divergence suggests that downside risk outweighs upside potential. Sound familiar? Yeah, back from the 2000 dot-com burst. And then just a week later, we said prudent investors should not buy stocks at this time, and aggressive investors and traders should play the market with a bias to the downside. And this is what happened after that. Now that you know what to look for, you need to know how to react. So let's look how to protect your entire portfolio using portfolio insurance. Now, here's another market turn I haven't talked about yet. Back in 2018, there was another big market drop towards the end of the year. You may remember it by the fact that it led right up to Christmas Eve of 2018, began in early October. Okay, if I zoom in even more, we'll see that our confirmed call signal went to a confirmed down at the close on October 4th, 2018. As a retiree, that is a great indication to become defensive and initiate portfolio insurance. So we do that by using a simple option trade that anyone can do called buying a put option. For our overall portfolio protection, we buy the put on the SPY, which is an ETF that tracks the S&P 500. Now basically, if the S&P 500 falls, our put option increases in value, offsetting some of the losses on the stocks in our portfolio. Right? Remember, the value of a put option rises when the value of the underlying asset falls. Like an insurance policy, you have an asset. If that asset is damaged, the insurance policy helps offset the costs. So the basic equation we use for a $100,000 portfolio generally means that you're buying usually 3 or 4 puts for each $100,000 of portfolio you're protecting. So in this case, in this theoretical case, we had a confirmed down on October 4th. You go out the next day, you buy 3 put options, and for our example, cost $604 per contract, or $1,812 for your insurance policy. Right? So you're spending $1,800 to protect $100,000. Okay, so let's see what happens. Well, it was a good thing protection was in place, because at expiration, had you held the option to expiration, theoretically, your put would have been worth over almost $12,000, $11,900. So while you still might have incurred some small losses in your portfolio, the put you placed as insurance helped offset that and protected you from a portfolio collapse. So the strategic shift here is that you need to go from worrying about what could happen and being unprepared when it happens, to where you have a strategic defense system in place which protects your hard-earned assets. Let's go to the second P in our retirement investing model portfolio. And here we're going to talk about profit. Now that you have that strategic defense system in place to protect your assets, you no longer have to be ultra conservative when investing. Instead, you'll be able to take full advantage of the market upturns to grow your portfolio. We need to have this mantra of buying safe stocks rising in price only when the market's rising. So for our retirement account, we want to look primarily at a stock safety more so than anything else. So Dr. DeLito, our mentor and founder of VectorVest, taught me a long time ago that good portfolio management starts with buying the right stocks. It's just like a sports team. If you fill the team with great players, having those players on the field or on the court or ice, whichever sport you want to envision, right? When you have that good roster of players on your team, you're much more likely to win. So by filling your portfolio with really good, safe stocks, puts the probabilities in your favor of having a winning portfolio. So let me just share some of the factors that go into our assessment of a company's safety. We look at things like earnings consistency, the ability for the company to meet or exceed earnings year over year. The company's size and stock price volatility comes into play. Debt to equity ratio, a strong balance sheet to weather any headwinds, whether it's specific to the industry or to the overall economy. Does a company have the ability to weather those storms? Business longevity, how long has the company been around? And then finally, dividend history. A good quality, safe company doesn't have to pay a dividend, but if it does, it better continue to pay it and grow that. So we look at the dividend history as well. Now, you don't have to be a stock market genius to do this. You don't even need to spend a lot of time to do it. Right? I mentioned earlier leveraging off others. Let's use VectorVest. Let's go ahead and take a look. I'm going to go into the VectorVest program. And from the home page, I'm going to go to the Viewers tab on the main toolbar, and that's going to take me to a watch list that I've created. Right? There are 41 stocks in this watch list. And I put these together, just 40 well-known companies made up of places where you shop, where you eat, where you drink, where you spend your money. So if you don't own the company, you're probably a customer of most of these companies, and they're very well-known places. So as you know, in the VectorVest spreadsheet, our default sort generally is the value safety timing indicator. Right? That's our default sort. So the stocks with the best combination of value, safety, and timing come to the top of this list of 41 stocks. So they're not just randomly placed here. Now, as I talked about, as a retiree, we're going to look even more so for the safety of the stocks and the companies that we're looking at. So that indicator is the RS, or relative safety. So of course, you're not going to go out and buy shares in 40 different companies. You don't want to run your own mutual fund here. But let's see what happens when I leverage off VectorVest and look at only the top 10. So what I want to do for my example here is, first of all, I'm going to change the date. And I'm going to take us back to a time where we began building portfolios for our coaching group. It's a couple of years, almost 3 years back we're looking at. It gives us the ability to look at these stocks through bull markets, through sell-offs, and a lot of different market trends. So I'm now looking at the same 41 stocks back on January the 2nd of 2019. And they are right now sorted by VST. What I'm going to do is click on the RS tab and sort these by relative safety. So the highest relative safety stocks come to the top of the list. Let's go ahead and run a quick test. If we had done that back almost 3 years ago, we would have had a nice run with the top 10 RS stocks from that list at over an 81% gain. Now let's do this. I'm going to close that quick test. I'm going to click on relative safety again, and I'm going to sort them, these same 41 stocks, with the lowest relative safety indicator coming to the top of the list, which we could see GE would top the list with the lowest RS at that time. Let's quick test those stocks for the same time period. And we can see, even though it is profitable, we are up, but we're nowhere near the S&P 500 of nearly 80%. And we do have 4 losing trades throughout that time frame. So again, this is point A to point B with no money management techniques in place here, but we can see already the strength of relative safety and the power it could bring to your portfolio. Now what I want to do next is come over to our stock viewer portion here, and I'm going to take us into the VectorVest stock viewer page. Now here we're currently tracking 8,950 stocks in real time here. And what I'm going to do is change that date back to our test date of the first trading day in January of 2019. Now I'm looking at the entire VectorVest database. Instead of just looking through 40 stocks, I can take nearly 7,000 stocks back on that date and sort them by relative safety, which is what I've done. Now let's go ahead and quick test the top 10 there. And we'll see we're up over 107.5%, outdoing the S&P 500 significantly in this particular test. And I enjoy sorting these by the best winners. FTNT came to the top if we're looking at those in the current time frame. And the takeaway is this: when I click on FTNT, I can right click on my mouse and take a look at a stock graph. And this illustration is all I need to know for the type of stocks that I want in my retirement growth portfolio. The type of stocks that are rising in price in a rising market. It's not a coincidence that as earnings continue to rise, so too does the price of the underlying stock. So when we are able to build portfolios based on those type of stocks, this is the type of results we see. This portfolio is up over 200% in just under 4 years. So that shift that you need to make is to go from that slow and stagnant growth to where you have a solid growth portfolio strategy that has you buying good, safe stocks at the right time so you can steadily grow your portfolio. Let's talk about the third P in our retirement investing model, and that is to provide. Remember, you don't want to rely on your pension or Social Security to carry you through retirement. In order to continue living the lifestyle you're used to, you need to open up new income streams. And there are 2 ways to do that. First, you want to get paid, and we'll talk about dividends first. Now, finding the best dividend paying companies for a lot of people isn't the easiest thing to do. They often make the mistake of Googling, good dividend stocks, but what will happen is they'll all be listed simply by the current yield, and the highest yields will come to the top. And it's a mistake a lot of folks make. Whatever website you go to, usually that's the case. But one of the big mistakes of analyzing dividend stocks is simply going for the highest yield. Is the company safe? Is that dividend safe? And is it predictable? That's what we have to know about these companies. Now, here in the VectorVest program, I have it set to here one of our watch lists, our pre-built watch list under dividend payers is the DRIP 25 Plus. It stands for Dividend Reinvestment Plan. The stocks on this list have not only paid, but have grown their dividends every year for the last 25 years or more. So it's a great place to start. In here we also have our dividend analysis. This is the dividend paid, the yield, and the safety, growth, and then the YSG vector, which combines all these on a 0 to 2 scale. Now, the top stock in that list right now is West Pharmaceuticals, one of my favorite stocks, a stock I own. You see, this is a 25-year look back or more, 26 years. What I like to call climbing the golden staircase. This is the dividend that continues to grow year over year. T. Rowe Price was another great stock on that list. Also 26-year history of a growing dividend and a price that over time just continues to rise. So I talked about earlier the dividend growth portfolio. It's up over almost tripling and again, this is a longer look back. That's 2013, but again, not including the dividends collected, which is near $50,000, and that doesn't include the power of reinvesting those dividends. So from our dividend stream of income, I'm going to change gears and go to collecting rent from your stocks. The second source of income is similar to collecting rent from the stocks you hold in your portfolio. You can use one of the safest, most popular option income trades available to you. Selling covered calls is an excellent way to generate income. Let's take a look at how the covered call works. Let's say you own a stock, ABC stock. You own it at $176 per share. Instead of just owning the stock and hoping it goes up, well, you can generate income and lower the cost basis by selling a covered call against it. So let's say you own or you buy simultaneously 100 shares of stock, and the covered call simply is this. Someone out there is willing to pay you money today for the right to take your stock away at a higher price at a future date. They're paying you today to take your stock away at a higher price. Here's what it looks like. Stock's at 176. You can sell the 180 strike price. And in this case, you would have received $10.33 per share or $1,033. What could happen? Well, the stock could go down. The profits from the call you sold will give you a cushion, and you would still have a stop in place just like you would if you owned just the stock. Now, what if the stock goes sideways? Well, you get to keep the $1,000, plus you can sell another covered call since you already own the stock. And then finally, if the stock goes up above the strike price, great, you make the max profits. You keep the $1,000 and the $4 from 176 to 180, you get to keep that capital appreciation. So when you implement the provide piece to your retirement investing model, you'll be able to shift from not having enough income to where you have a steady flow of consistent income, which will allow you to continue living the lifestyle you're used to when you retire. So remember our goals. It's possible to take control of your retirement when you have that clear plan in place. You don't need to be worried about a market collapse when you have strategic defense system in place. You can see steady growth in your portfolio by using a safe, solid growth strategy. And you can generate consistent income with new income streams using dividends and covered calls. So that's it. These are the 3 core strategies every retiree must know so that they can retire with the peace of mind knowing they can grow their capital, generate income, and most importantly, preserve their net worth. When you execute this plan, then and only then will you achieve those goals of building wealth, transforming your legacy, and living financially free. So if you're not where you want to be and you have really no plan in place to get there, stay with me just a couple of more minutes and I can put you on the right path. Because I believe you have a choice. You can choose to do absolutely nothing and keep doing what you're doing right now, but the same thinking will surely get you the same results. You can choose to do it alone, but mistakes, we know, can be very costly. Or you can choose to get right to the solution. Why do all the work on your own when there is training available that allows you to bypass all the trial and error and get you success much faster? So instead of taking the long way from where you are to where you want to be, learn how to take a shortcut. That way you get your retirement on solid footing as quickly as possible. So it's a simple plan called the Retirement Portfolio Transformation. Let me walk through the easiest way to explain the course and map it out for you. So taking the 3 Ps into account, using the 3 Ps model from VectorVest, the course will guide you through setting up the plan. First, we'll build a strong foundation for your retirement. This is where you'll get clear goals and objectives. Always remember, a goal without a plan is just a wish. Next, you'll learn how to increase your capital with a safe growth portfolio. So for your portfolio to steadily grow every year, you need to fill it with the right stocks and manage them correctly. In this module, we'll show you how a tried and true process can help you complete your profit transformation. And in Module 3, we'll begin your provide transformation by learning how to build and manage your prudent dividend growth portfolio. Dividends are a source of income every retiree should take advantage of. In Module 4, we'll complete your provide transformation by teaching you two of our go-to option trades, not just the covered calls, but we'll talk about selling puts as well to generate income. Even if you never traded options, you'll understand how easy it is to implement. And then finally, in Module 5, you'll learn how to preserve and protect your net worth. A lot of people don't have a plan for when the market goes against them, and you don't want to just sit there and worry about what could happen. You need to be proactive. You need to take control. In this module, we'll complete your retirement transformation by teaching you how to preserve your net worth. Now, the total value of everything in the retirement portfolio transformation course would be roughly $4,300. We have bonuses available along with the recorded course you have access to for 1 full year. We do have 5 live mastery support sessions, and you'll also be invited for 5 weeks to access my members only group coaching sessions that we have every Tuesday at 2 p.m. Eastern Time. Order before 5 p.m. on Monday on August the 30th, and we have our early bird special. It's going to be just $5.95. Go to vectorvest.com/transform, and you'll get all the details you need there. Keep in mind, this is a completely guaranteed course. Do the work, show that you've attempted to understand the process, and if you're still not satisfied, we'll give you a full refund. We'd love to see you with us, and we look forward to working with you, helping you take control of your retirement portfolios.
Yeah.